Wall Street veteran Tom Lee, head of research at Fundstrat, is predicting the S&P 500 could roar back to all-time highs in the next 6 weeks. This isn't just wishful thinking, it's based on solid analysis and historical trends. He literally said for anyone who thinks that they've lost 10% and it'll take them forever to make that back, if they are patient, they might make that back up in 6 weeks. Imagine that, a complete turnaround in just a month and a half. It might sound too good to be true, but history has shown us that markets can rebound quickly and powerfully. So, are you going to sit on the sidelines and miss out? Or are you ready to capitalize on this incredible opportunity? The choice is yours. In this video, we'll hear what Tom Lee has to say in his own words. And after that, we're diving deep into 2 companies that are primed to absolutely crush it in this market rebound. These aren't just any companies, they are leaders in their respective fields with strong growth potential. These are companies that are at the forefront of innovation and industry leadership. They are not just surviving in this market, they are thriving and setting new standards. We're talking about a leader in high-performance computing, a pioneer in the financial technology revolution. These companies are not just riding the wave, they are creating it. If you only watch one video today, make sure you watch this one, all the way till the end. We're going to provide you with actionable insights that you won't find anywhere else. Before we jump in, hit the like button. Let's get 1,000 likes on this one, share the video, and leave your thoughts in the comments. Your engagement helps us bring you more valuable content. Subscribe to the channel so you don't miss out on the next important financial investing update. Stay informed, stay ahead, and let's navigate this market together. Let's hear what Tom Lee has to say.
One of your next guests says the markets will find their footing before April 2nd, when the reciprocal tariffs, at least for now, are set to take effect. Joining us now for more is Tom Lee. He is the head of research and founder of Fundstrat, also a CNBC contributor. Also joining us, Nancy 𝗗𝗟𝗡𝗧 Investments, CIO and CEO. Tom, listen, I understand it's a different White House. Every day we get a market-moving headline. A lot of people, I think, honestly, I'm just going to say it, they don't want to be neutral. They don't want to be data-driven. They want to be angry. I get that. But history says that markets will recover, right?
Yes, they've recovered every time. One thing we have to keep in mind is when markets fall this quickly from a 52-week high, I mean, just remember, less than a month ago, we were at all-time highs. That is a market pricing in a crisis. I'd say we're almost 50% pricing in a recession, and we're assuming there's no Fed put. Now, the Fed is in a position to cut rates. That really should mitigate the downside. And I do think 2 other things that investors have to keep in mind, because many people just want to get out until April 2nd, is number one, I do think there's a very high probability that a tariff solution happens before the next 3 weeks happens. And it's simple to see because China, Europe, Canada, Mexico, since April 18th, all of those countries have outperformed the U.S. I don't think that markets are that blind to say if Canada and Mexico are about to have a recession, they should outperform the U.S. And I think the second thing people should keep in mind is that when you have a global crisis brewing, and we highlighted like the 1962 Cuban Missile Crisis, that was a 12-day crisis, but the markets bottomed 7 days into the crisis. 5 days before that crisis ended, the market was already recovered 2/3 of the losses.
And that was only, Nancy, nuclear holocaust. I mean, that literally was, we're going to break the world in half with ICBMs. I mean, that was, compared to tariff worries and a slowdown in the economy because we might slap something on European wine or steel, seems very small now. That said, again, and I'm not saying the markets are going to recover next week. I don't know. We're talking about history, and I don't like to bring up politics, Nancy. It always makes me feel like I need a shower, but I will ask you this. How much of this correction that we are seeing do you think, 100%, 50%, 0%, is political, is man-made, is tariff-made?
It's funny you asked that, Brian. It's good to see you. If you look at the consumer sentiment numbers today, and I commend everyone to read Kelly's piece that she wrote this morning, but if you look at behind it by political party, what you see is that Democratic sentiment has not been this low, especially on expectations, ever. And so if you look sentiment overall by party, Democrats down from 91.4 all the way down to 41.4, while independents and Republicans are down somewhat but have held up. And then on expectations, down from 28.2 down from 93.1 to 28.2. So that's driving some of these sentiment numbers that the market's keying off of. And I would just point out that the bond market is not panicking. And so this notion that we're going to go into recession because the Atlanta Fed GDP Now number was revised down, that was driven by imports. They were up 70% in January as purchasing managers trying to get in front of tariffs. So I think just like in 2022, this will all settle in. We are seeing decelerating growth, but that's good for many of the names that have been punished, the reliable earnings growers in technology and consumer discretionary and some financials even. So I think we will continue. This is a correction. We needed one. We get one every 12 months. And so now the question is, have we hit the bottom? Do we have a little more to go? But I don't think we're in a bear market.
Now, before we dive in deeper into today's list, I want to let you in on a little secret that could completely transform how you invest and grow your wealth. This video is sponsored by Forecaster Terminal, a tool I've been using to uncover these incredible stocks, and honestly, it's been a game changer for my research. This software, powered by the Forecaster AI agent, uses cutting-edge artificial intelligence to analyze all financial instruments, whether it's stocks, ETFs, cryptos, indexes, forex, and even commodities. It's like having your own expert financial analyst working around the clock to give you the most accurate insights and uncover new opportunities. With Forecaster, I can quickly identify value stocks, growth stocks that are ready to break out, and even spot seasonal trends in the market that most investors overlook. I can spot insider transactions in seconds. The political tool tells you when politicians are buying or selling shares in a company. If you're serious about investing, this is the tool that can completely transform your portfolio. It's designed to help you find opportunities, reduce risks, and make smarter decisions that could grow your wealth faster than you thought possible. So, if you're ready to take your investing game to the next level, click the link in the description now to try Forecaster Terminal for free, and use my code Galore10 to get a 10% discount when you sign up. Don't miss out on this game changer for your portfolio. Alright, let's jump right into it with our first company, AMD, or Advanced Micro Devices. Founded in 1969, AMD has grown from a small startup into a global powerhouse in the semiconductor industry. Their journey has been nothing short of remarkable, filled with innovation, competition, and a relentless drive to push the boundaries of technology. Now, if you're even remotely familiar with the tech world, you know that semiconductors are the lifeblood of everything. These tiny chips are the unsung heroes behind the scenes, powering the devices we use every day. They are the essential components that make modern technology possible, enabling everything from basic computing to advanced artificial intelligence. Your smartphone, your laptop, your car, even your refrigerator, they all rely on these tiny chips to function. Without semiconductors, our world would come to a standstill. These chips are the brains behind our devices, processing information at lightning speeds and enabling the seamless operation of our digital lives. And AMD, well, they're one of the biggest players in the semiconductor game, going head-to-head with giants like Intel and NVIDIA. Their headquarters in Santa Clara, California, is a hub of innovation and technological advancement, going head-to-head with giants like Intel and NVIDIA. The competition in this industry is fierce, but AMD has consistently proven that they can hold their own and even surpass their rivals. But here's the thing, AMD isn't just competing, they're winning. Over the past few years, AMD has been absolutely crushing it, consistently releasing cutting-edge processors that outperform the competition in both performance and value. Their product launches are highly anticipated events, drawing attention from tech enthusiasts and industry experts alike. We're talking about their Ryzen series CPUs, which have become the go-to choice for gamers, content creators, and professionals who demand top-tier performance from their machines. Absolutely dominating in the desktop and laptop markets, and their Radeon graphics cards giving NVIDIA a serious run for their money. These products have set new standards in the industry, offering exceptional performance at competitive prices. AMD's commitment to delivering high-quality graphics solutions has made them a favorite among gamers and professionals alike. This isn't just a fluke, guys, it's a trend. AMD has been laser-focused on innovation, pouring billions into research and development, and it's clearly paying off. Their R&D labs are buzzing with activity, as engineers and scientists work tirelessly to develop the next big thing in technology. But what does this mean for you as an investor? It means that AMD is not just a tech company, it's a smart investment. With their strong track record and forward-thinking approach, AMD is poised to continue its upward trajectory. Think about it, the world is becoming increasingly digital, with more and more devices requiring more and more processing power. From smart homes to autonomous vehicles, the demand for advanced semiconductors is only going to increase. From artificial intelligence to cloud computing to the metaverse, The demand for high-performance chips is only going to skyrocket in the coming years. AMD is at the forefront of these technological advancements, ready to meet the challenges and opportunities that lie ahead. And AMD, with its superior products and aggressive growth strategy, is perfectly poised to ride this wave. Their ability to innovate and adapt to changing market dynamics has positioned them as a leader in the semiconductor industry. The company currently has a market cap of $163.62 billion and an earnings per share of $1.02. With a PE ratio of 98.99, AMD is trading at $100.97, which is significantly below its fair value of $189.32. Despite the turbulence in the tech sector, there are signs that AMD's stock might be ready for a rebound. Recent reports suggest that AMD is entering oversold territory, which could be a signal that a recovery is on the horizon. The company's fundamentals remain strong, with a solid balance sheet and impressive free cash flow generation, putting it in a good position to weather current market volatility. Analysts are particularly optimistic about AMD's future growth, especially in the AI sector. After discussions with CEO Lisa Su, there's growing confidence that the company could achieve over 20% growth in 2025. For long-term investors, this market correction may present an opportunity to buy AMD at a discounted price, as many believe the stock is undervalued right now. The company's profit margin stands at 7.71%, with a return on equity of 2.85%, and an exceptionally low debt-to-equity ratio of 0.01, indicating minimal leverage. AMD has had an incredible run-up in recent years, but here's the thing. I genuinely believe this is just the beginning. Their earnings are through the roof, their future prospects are brighter than ever, and with Tom Lee's prediction of a market rebound, AMD could be set for even more explosive growth. Remember, we're not talking about timing the market perfectly here. We're talking about long-term investing in a company with a rock-solid foundation and massive growth potential. AMD's commitment to excellence and innovation makes it a compelling choice for any investor looking to capitalize on the future of technology. So whether you're a seasoned investor or just starting out, AMD is a name you should definitely keep an eye on. Their journey is far from over, and the best is yet to come. Now let's move on to our second company, Sofi Technologies Inc., ticker symbol Sofi. Founded in 2011, Sofi has quickly become a household name in the fintech world, and for good reason. Now, Sofi is a company that's near and dear to my heart because they're doing something that I'm incredibly passionate about, democratizing finance and making it accessible to everyone. They are breaking down the barriers that have traditionally kept many people from accessing high-quality financial services. See, Sofi isn't your typical bank. They're a fintech company, a pioneer in the digital financial revolution, and they're shaking things up in a big way. Unlike traditional banks that rely on physical branches and legacy systems, Sofi leverages cutting-edge technology to provide a seamless and efficient user experience. So, what exactly does Sofi do? Well, their mission is to help people achieve financial independence and realize their ambitions. They do this by offering a comprehensive range of financial products and services. Well, they offer a whole suite of financial products and services, all through one easy-to-use app. This includes everything from student loan refinancing to personal loans, mortgages, investing, and even cash management accounts. It's all about providing a holistic financial solution under one roof. We're talking about student loan refinancing, which has been a game changer for many young professionals burdened with student debt. By offering lower interest rates and flexible repayment options, Sofi helps graduates manage their loans more effectively. Personal loans, which can be used for a variety of purposes, from consolidating high-interest debt to funding major life events. Mortgages, which are designed to make homeownership more accessible and affordable. Investing, which allows users to build and manage their portfolios with ease. And even cash management accounts, which offer high-yield savings and checking options. They're essentially a one-stop shop for all your financial needs, and they're doing it with a focus on technology, transparency, and most importantly, the customer experience. Sofi's user-friendly app and website make it easy for anyone to manage their finances, no matter their level of financial literacy. But here's what really sets Sofi apart. They're catering to a generation that traditional banks have largely ignored, millennials and Gen Z. These are the digital natives, the ones who live their lives online, and they're demanding a different kind of financial experience. These are the digital natives, the ones who live their lives online, and they're demanding a different kind of financial experience. They want simplicity, they want convenience, and they want to feel like their financial institution actually understands them. They want simplicity, they want convenience, and they want to feel like their financial institution actually understands them. Sofi's intuitive platform and personalized services resonate deeply with this demographic, making financial management not just a necessity, but a seamless part of their digital lifestyle. And that's exactly what Sofi delivers. Their commitment to customer satisfaction is evident in their high ratings and positive reviews. Users frequently praise the app's ease of use, the helpfulness of customer service, and the tangible benefits they've experienced. Now, SoFi is still a relatively young company, but their growth has been nothing short of phenomenal. Since their inception, they've expanded their offerings and grown their member base at an impressive rate. They've amassed millions of members, their revenue is skyrocketing, and they're constantly expanding their product offerings. This rapid growth is a testament to the value they're providing and the trust they've built with their users. But here's the kicker, they're just getting started. The fintech space is still in its early innings, and SoFi, with its first-mover advantage and innovative approach, is perfectly positioned to become a dominant player in the years to come. Their ability to adapt and innovate will be crucial as they navigate the evolving financial landscape. With a market cap of $13.26 billion, Sofi's earnings per share is 46 cents, and it has a P/E ratio of 26.28. The company is projecting revenues of $2.61 billion for 2024, with net income at $498.67 million. Recently, SoFi secured a deal with Blue Owl Capital for up to $5 billion, which will enhance its loan platform, highlighting the company's significant growth potential. In addition, SoFi announced a distribution of about $0.1845 per share for its enhanced yield ETF, THTA, reflecting a 12% distribution rate, an attractive feature for investors. Analysts are bullish on SoFi's growth strategy, particularly its land and expand approach, which is expected to drive continued profitability, even in the face of market challenges. Despite recent corrections, SoFi remains a favorite among analysts due to its innovative financial services and solid growth metrics. SoFi presents an intriguing investment opportunity with its diversified product offerings and a focus on digital financial services. The company's fundamentals reveal a dynamic balance between high growth potential and evolving profitability. While its intrinsic value is nearing premium levels, the company's financial health is solid and it shows promising operational performance. Though the company doesn't have a major active buyback policy in place, its operational efficiency remains resilient. Sofi's competitive edge is also strong, with a moat score of 6 out of 10. Insider and institutional buying trends further support long-term confidence in its leadership and strategy. Now, I know some investors are hesitant about fintech companies, especially after the recent market downturn. It's natural to be cautious, but it's important to look at the bigger picture. But here's the thing. SoFi is built on a solid foundation. They're profitable, they have a diversified business model, and they're addressing a real need in the market. Their focus on financial wellness and customer-centric approach sets them apart from many competitors. And with Tom Lee's prediction of a market rebound, SoFi could be set to soar. Lee, a well-respected market analyst, has highlighted the potential for fintech companies to thrive in the coming years. And SoFi is well-positioned to take advantage of this trend. Remember, investing in disruptive companies like SoFi is about recognizing their long-term potential, not getting caught up in short-term market fluctuations. The future of finance is digital, and SoFi is leading the charge. By staying ahead of the curve and continuously innovating, they are not just participating in the financial revolution, they are driving it. So, there you have it, two incredible companies, AMD and SoFi, that I believe are poised for massive growth in the coming years. Both AMD and SoFi are poised for potential growth, with each offering unique opportunities depending on your investment strategy. Remember, these are just two examples, and there are plenty of other amazing opportunities out there if you know where to look. If you want to take your investing to the next level, Forecaster is the ultimate tool I trust to find incredible stocks like these. Don't wait, try it for free today. Just click the link in the description with my code Galore10 for an exclusive 10% discount. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. What do you think about Tom Lee's prediction? Are you bullish on the market rebound? Let me know in the comments below. And as always, don't forget to hit the like button, share this video with your friends, and subscribe to the channel for more awesome investing content. Until next time, happy investing.